What's going on YouTube? It's your boy Charles Slay here, and today I'm going to be breaking down market structure at its simplest form, at its macro level, so you guys can have a full understanding on how exactly we use it and how the market works. All right, family, so I'm going to be breaking down market structure in about 4 steps. All right, so I'm going to be breaking down what is market structure. All right, that's number 1. 2 is how to use it. Right? 3 is the different type of entries after you use market structure. And then number 4, I'm going to be breaking down some examples so you guys can have a full understanding on how exactly we use this and how most traders use price action and use naked trading to their advantage. All right, so I'm going to go ahead and switch to my my iPad real quick so you can have a full understanding. Stick me up in that nice corner over there. And we're going to go ahead and break down what market structure is in a synopsis. All right, so market structure. So I have my iPad here. We're going to go ahead and break these things down. These are some of the what is, right? The actual definition. The definition of market structure is the identification of highs and lows in the market. Excuse my handwriting. I was obviously writing these things down. This is the definition, right? So you use 2 basic tools, right? You use trend lines and you use horizontal lines, right? If you don't know, trend lines are diagonal support and resistance levels, and horizontal lines are literally what it sounds like. Horizontal support and resistance levels, right? Also, what's with market structures, you have candlestick formations, anything that involves the focus of highs and lows. So if if I'm gonna break this down, HHHL LL LH in just a second, but a lot of factors come into market structure. You have different steps, top-down analysis, levels, supply and demand, all of that come in market structure, right? But we're gonna go ahead and break down market structure in its innate level. I'm gonna go down to this first. So market structure is like I said, is the identification of highs and lows in the market. Now I'm gonna show you the long way, but then I'm gonna show you the short way. We're gonna go through this uptrend first, okay? With this uptrend, you have, the original low here, right? Then you have the higher high, right? Then you have the higher low. Now, why is it high first, right? Because you see here in a downtrend, we start with high, and then we go with a lower low, then a lower high. Why does the low come first? Because we're using it in the direction of the trend. So if we're in an uptrend, what does it have to do? It has to break highs, right? It's that simple. In order for this high to form, this high had to be broken, okay? In order for this high to form, this high had to be broken. In order for this high to form, this high had to be broken. It's very, very simple. You have to understand that highs and lows, higher highs and higher lows are all based off the trend, okay? So obviously we're in an uptrend, but it created a low. So even though it was higher, let's break it down even simpler. This low is higher than this low, okay? So we call that a higher low. This low is higher than this low, so we call that a higher low, right? This high is higher than this high, so we call this a higher high. And it's very self-explanatory from there. When we're going for the actual downtrend, right? When we're talking about the downtrend here, right? We have this high, but this high is lower. This high right here is lower than this high, right? So we call that a lower high, right? And it's low because we're in a downtrend, okay? So this low is lower than this high, so we call this a lower high, right? And this low here is lower than this low, so we call this a lower low, right? So we have to keep things very, very simple, okay? Now, how I do this, I don't go by higher highs, higher lows. I literally just go by these 2 letters here, a high or a low, okay? Is it high or is it low? Very simple, right? Is this a high? Yes. Is this a low? Yes. I don't really care what's a lower low or what's a higher high. Obviously, we are in a downtrend, but you need to know this prior to, okay? So next thing, right? Let's go down here. Now we're going to be talking about the different types, right? The different types of entries. Actually, we'll talk about, let me give you some examples really quick before we even get to that. Let me get you some examples. Let's do this. Right, as you can see from the chart, right? Obviously, this is AUD/USD, right? And we're using this in a, you know, very, very simple way of looking at things. So let's break this down. This is a high, this is a low. This is a high, this is a low, right? You see how I'm breaking this down? This is a high. So what's next? A low, right? What's next after this low? A high, right? Now it's just a matter of, okay, are we going to break this high, or are we just gonna, are we just going to continue to come back down and then come back up and then come back down and then come back up, right? What exactly are we going to be doing? Because these are questions that need answers, right? Yes, we could say this is a high, this is a low, this is a lower high, this is a lower low, lower high, lower low. But people get confused when we talk about stuff like this, right? We just need to know, okay, this is going to continue being high, this is going to continue being low, but when this breaks this high, right? When it breaks this high, then what's next? A low, right? Boom, right? And then we go from there. I don't like overcomplicating my trading, right? I just don't like it. I don't like overcomplicating my trading. It keeps things extremely complicated, and I don't want to keep things complicated for myself, because that's how you mess up, right? So let's go ahead and get to the next part of what we're doing. I want to talk to you guys about how to use, you know, how to use market structure. Where does it actually come from, right? Well, not really how to use it. The different types of entries, the different types of entries, right? Because we just showed you how to use it, but I'm going to show you how and the different types at the same time, right? So let's go ahead and break this down. Go back to the iPad. Let's go ahead and show you the different types of entries that exist. So there's two types of entries, okay? You have retest and you have breakout, okay? You have retest and you have breakout. Now I'm going to go over breakout because it's a lot more simplified, and we're able to talk about this in a very, very simplistic way. Okay, a breakout is just when price breaks a low or a high, right? So in this case, price broke this low here, and as soon as price closes below this low, you take your sell. Simple, right? Let's use it in a much simpler way as well. Let's say we're coming up here, boom, don't mind the drawing, price comes down. We need this high to be broken in order for us to buy. So if price comes up here and closes above this high, then we buy the opportunity, right? We buy it. Now, let me repeat this again, because I don't want, you know, for you to get confused. It's extremely simple. When price breaks a level, you look to just take the trade, right? Now, this could be one candlestick. It could be a series of candlesticks. It doesn't necessarily matter as long as you know where your entry is, right? And then from there, after you figure out your entry, then we talk about our stop loss, okay? As you can see, this is our stop loss here above the high. That's how it works, right? All stop losses and TPs are just support and resistance levels. That's all they are, right? You look for the previous and you look for the next support and resistance, right? To identify your stop loss and your TP. So your previous, right? Let me change this color here. Your previous is always going to be your stop loss. Your next is always going to be your TP. Let me repeat that again. Your previous is always going to be your stop loss, and your next support and resistance is always going to be your TP, right? So when I enter here, right? When I enter, I need to already, before I even enter, I need to understand where my previous is and where my next is before I enter into the trade, okay? That's before I enter into the trade. And as soon as I enter, then I just plug in those numbers, right? It's the same thing here, right? If I entered here, what's my previous? This is my previous. What's my next, right? Somewhere up here is going to be my next, right? So you just have to understand that, right? Breakout is very simple. All you're looking for is a candlestick to close below a certain area, and then you execute. Right now, retest is something different. Okay, retest is something different. All right, retest is when after it breaks that specific area, we're waiting for it to retest that area for the second time or more times. Okay, now it can retest a specific zone it just broke, or it can retest a zone that it previously created. Okay, so this is a zone that it touched the same area twice. Right, it's different from a breakout and a retest. See, this didn't break and retest. This came and scooped back up. Right, you can classify this as a breakout, but it didn't retest this level. It came back to this original state and retested that level. So you have to be ready for both types of retests. All retests are is definitely is just what's in the name, right? Retest. Right? What does re mean? It means it repeated itself. Repeated the test. And what did it test? The area. Right? So all we're looking for is and all we're looking for is a second touch, because after the re means that it touched more than once. Right? It touched more than once, which means it had to have touched for the second time. Okay? It had to have touched for the second time. So you have to understand this so you can have a full simplistic understanding of, okay, a retest is when it touches an area more than once. Okay? So after you so how exactly do you enter off of stuff like this? Knowing how to use it, right? Knowing what it is, its highs and lows, how to use it, which involves, trend lines and understanding, the way it works, how exactly we do it. Now, how exactly do we enter, right? How exactly do we enter into the trade? So let me scroll down here. All right, let me scroll down here for a split second, right? And actually, let me scroll up real quick, because here's some links for you to actually be able to utilize this. TradingView is a platform where you're able to mark up your charts, which is what we're going to talk about in just a second. Hugo's Way is the broker, right, that we use to execute our trades. Now, you can also use Osprey. We have Osprey in the description below that you can use. MetaTrader 4 is also the #1 app, right, to actually execute your trades. See, the broker is there for you to transfer your money and ask questions, right? MetaTrader 4 is there for you to actually execute your trades. Forex Factory is dealing with your news. This is your news outlet. You also want to use Bloomberg. If you want to check out the video that I broke down in the top apps that I use, definitely I'll link that in the description, or click one somewhere on the top of the screen. I definitely have that there for you as well. So we have the news. These are the links I want you to get highly familiar with, right? Like I said, you can use Bloomberg. That's another option, right? You can use CNBC, right? I can't necessarily remember like the stock or news outlet that mainly focuses on certain things that you want to pay attention to in regards to forex, but it's a stock app or something like that. I can't remember, but we definitely want to get you in how exactly do you take your entries. Okay, entries is very important. All right, so let's talk about, like I said, we talked about the two ways of how to use the two ways of entries, but how exactly do we enter, right? What do we look for when it comes to entering into a trade, right? So I'm gonna draw some candlesticks here. Like I said, don't mind my drawing skills. You know how it goes in these streets, right? These I'm gonna use green, right? I use this candlestick formation called an engulfing candle. Okay, an engulfing candle. What an engulfing candle does is it lets you know that the bulls or the bears are in the market. And I actually drew this wrong when I think about it. That's funny. All right, so let's go ahead and erase this really quick, right? And use, because it's actually green here, right? Because I want you to have a full understanding on what it is. And then we have red here, which crazy is I drew it backwards. Because in this case, this is bullish. Right? This is supposed to be up. Boom. All right, so you have something called a bullish engulfing, and you have something called a bearish engulfing. Okay. Now, what is another word for bull, bear? Because they all mean the same thing. Okay. Bull is another word for saying buys, right? Another way for saying up, right? Bears is another way of saying sellers, right? This is buyers. This is sellers. This is like down. Right, it's just another way of using that word. Now, what exactly are these candlesticks? These candlesticks indicate momentum is flowing through the market. So, an engulfing is literally what it sounds like. This second candlestick, right, is completely bigger than the first one. Okay, this is the first one, right? All it did is break through this zone here. Okay, I want you to literally understand that engulfings are very powerful. What engulfings do is break through a zone. The first candles, because I want you to understand what this is, right? All highs and lows are, like I said, are support and resistance levels, right? So this is a resistance, this is a support, this is a resistance, this is a support. So what engulfings do is they break through support and resistance levels. This is the simplistic way of looking at this. But the second candlestick, right? Remember, the second candlestick, right, has to be larger than the first one, okay? So you see how this red candlestick here is completely longer and larger than the second one? See how this bullish candlestick, this green candlestick here, is completely larger than the first one, right? You need those specific movements to happen to indicate that the market is making a decision. It's a decision factor candle, okay? So going back to what I was saying, when we're looking for these retests, right? Because I'm a retest trader, right? I used to be a breakout trader, but I'm going to show you retest, right? When price comes down, right, and comes back up to a specific level, right, comes back up to a specific level, and I'm going to use this as a zone here, right? When price comes back to a specific level, what do we look for? Okay, what do we look for? All right, I'm actually going to make this, I don't want to confuse you guys in regards to the colors. So what we're going to do is delete that and make this a different color here. All right, we'll make this yellow. I don't want to confuse you in colors. So what we're looking for is a candlestick formation in this level. Okay, candlestick formation. Now, when it comes to trading, how to enter into a trade is very, very simple. Okay, you want to look for minimum. I'm going to put min here for minimum 3 confirmations, aka confluences, right? AKA confluences. All right. So in order for you to enter into a trade, you need some form of confluence. 3 of them. Okay. So what's the first confluence? Right? What's the first way in entering into a trade? Right? This is how I trade. Right? I'm going to draw it correctly. We have boom. We have this. Boom. Let's make sure we do this correctly. Boom. All right, cool. So this is how I enter into a trade. Right? You have 1, 2, 3 touches here. 1, 2, 3 touches here. This is indicating what? Right? This is for people who don't understand patterns, right? My first confluence, right? I'm going to put con for confluence. Number 1 is a pattern. Okay? That's my first confirmation. Is this pattern? What is this pattern called? It is an ascending channel. I'm going to put ascend for ascending. Number 2, what's my second confluence? We have a multi-touch. What that means, right? If you want to learn how exactly I trade, definitely get my ebook down in the description. I got you guys. Number 2 is multi-touch. What does that mean? Multi-touch means that we have 1, 2, 3 touches in this area. Okay, that's a multi-touch, right? Now, this is just 2 confirmations. All right. We can also go with the third one, right? This is why I love trading, because you can just stack confluences. I also use fibs. If you want to learn how my current fib strategy, definitely click the link below. But the 0.618 level is so powerful, right? So the third one is usually going to be my fibs, right? And I usually trade between the 50% and the 61.8% level. That's my third confirmation. Usually off of that, you could take the trade. But for me, when it comes to trading, I like to use, like I said, candlesticks as an extra confluence. So what I like to do is, boom, we have our green candlestick here. And then we have our red candlestick here. What does that mean? That means we have now confirmation and momentum that this is dropping to the downside. So where would my stop loss be? My stop loss would be up here, right? This is where I would put my stop loss, right? And then my TP would be down here at the next, right? So that would mean that I'd have, in this case, you know, with this drawing, I also use as a confirmation, right? So the fourth one is candlesticks, right? What I also like to use, which might not count as confirmation, is my risk to reward. Okay, risk to reward is very important when it comes to me entering. Okay, one of the confluences for me is I need at least a 3-to-1 risk to reward. Now, from this example, obviously this is more like a 1.2 or something like that. But in a market, which we'll get to the examples later, I want a confirmation. I want the confirmation of the risk to reward being at least 3-to-1. Okay, very, very simple. Very, very simple. All right, like I said, trading isn't hard. It's very simple, right? You just have to break down. It's challenging, right? All you have to do is break down, where are we in the market? The big word that you want to use is where. Are we at a high or are we at a low? Right? If we're right here at a low, then the next thing we're looking for is for it to make a high. Right? That's all we're looking for. And then we indicate what we're looking for next. And from there, right? This is from the example that I just showed you. Right? This is a high. This is a low. This is a high. This is a low. This is a high. So then what are we looking for? Right? What are we looking for? A low. Looking for that low, right? So all I'm doing is using the market structure, the basic of market structure, and align it with my strategy, right? And aligning it with my strategy gives me confidence, right? Now we're getting into the psychology, right? Because market structure has everything to do with psychology, right? I'm just gonna put psyche for this, right? What this does, right? I want to make sure you guys can see it. Is this removes hesitation. Okay, it removes hesitation. How many times have you guys looked at the market and hesitated in entering? How many times? Right? What this also does is it helps you gain confidence. Right? It helps you gain confidence. And from confidence, it allows you, it brings clarity. That's what it does. It brings clarity. And then you seeing it over and over and over again does what? Last but not least, it gives you visualization. You'll be able to see your setup before that happens. Now, how do you even get to this point? Right? It's this big word called back testing. Okay? It's this big word called back testing. You have to back test your strategy in order for you to have a 100% understanding on how this works. You have to. Right? Doing this over and over and over again kills these 4 laws of everything when it comes to trading. Okay, so hopefully you guys had an understanding. Let's go ahead and get back to the chart so I can give you some examples of what exactly we do. All right, so this is the actual chart, right? I want to go ahead and break down the chart, break down everything that we discussed in regards to trading. All right, so I'm going to break down my strategy once again, break down the highs and lows in the market once again, so you can have a full understanding on how this works. Okay, so what is, I want you to repeat this to you. What is this, right? This is a low, right? What is this? This is a high, right? This is a low. This is a high. This is a low. So then what comes next? Right? Think about it. What comes next? A high comes next, right? So now that we know this, because this plays this confluence, now that we know this, now we can talk about how exactly we enter into the trade. What are our rules in entering into a trade? So like I said, I like to smack my fibs on, right? So where are we in this, right? We are in between the 50 and the 61.8 level. Perfect, right? We're in between the 50 and 61.8 level. That tells me, right, that we're in a nice golden zone, a zone where price can immediately reverse. Okay, that's what this tells me. All right, so that's one confluence. My second confluence, right, is that we're at a nice low here. Right, we're at a nice low here, a nice zone, a nice support level where price can reverse. Another confluence is a pattern. Okay, this is what you would call, on the grand scheme of things, a bullish flag / descending channel. Okay, this is what you would call that. Right, on the weekly, it looks like a bullish flag. On the daily and the 4 hour, this looks like a descending channel. Not only that, right, we have multi-touches. 1, 2, 3, right? Price touched this level 3 times and touched this zone here twice. Very high probability setup. Okay, not only that, when we drop down to the 4 hour time frame, because this is what we're doing, is we're breaking down top-down analysis. We have another multi-touch. 1, 2, 3. So this is a pattern within a pattern is what I'm seeing, right? Not only that, if we go down to the 1 hour, right, we have another multi-touch, right? You have this candle here, this wick here, and then this touch here. So we have a pattern within a pattern within a pattern. I don't even know how many confluences that is, okay? And then from there, we already have our fibs. Right, so from there, it should just be self-explanatory to just enter into the trade, but we're not entering just off yet. We're going to be entering off of a candlestick. And this bullish engulfing that you see here, this is our confluence in getting into the trade. This green bullish engulfing. You could definitely use this first green bullish engulfing if you wanted to, 100%. Okay, and then like I said, last but not least, I need at least a minimum 3 to risk to reward. From just to this high is a 3.81 risk to reward. That's perfect for me, right? That's perfect, right? That's a trade that I would take every single day, no problem. Every single day, no problem. Okay, now let's get to the next pattern. Let's get to another example. Last example. Okay, we have this trade here. Okay, I'm gonna replay it. We're using this setup. Okay, going to replay it here. Boom. Okay, now I want you to understand that not all the time do I use engulfing candles. Okay, actually we'll use this setup instead, but not all the time do I use engulfing candles. When you always want to use more than just engulfings. Price doesn't always give you engulfings, so you want to use more than just what it gives you. Okay, you want to use pin bars, you want to use railroads, you want to use wicks, all types of stuff. Okay, so we're gonna act like we're taking this buy here. Okay, this buy right here. What am I looking for first? Okay, we're looking for a low, a high, a low, a high, and then a low. What comes after a low? A high. Very simple, right? Very, very simple. So what we're gonna do from there is we draw our fibs. Did it come to the 50 and 61.8 level? Yes, it did, right? Came to it twice. So after we saw it come to this level twice, then what? What do we look for? Right? For me, I look for a pattern. You might not look for a pattern. You might be fine with it just hitting the level and you just take the trade. You just need minimum 3 confluences, okay? So after that, look what we got, right? Look what we got. We got a bullish engulfing exactly in that area. So I would have taken my trade. I would have entered here, stop loss below this low here, right? And I need at least a 3-to-1 risk to reward. All the way to this high is a 5.65 risk to reward, and it smacked it all day, every day. It smacked it. Okay, so I want you guys to understand that trading is extremely simple as long as you understand market structure and how it works. Okay, so man, I really hope you guys got some value off of that. It was a lot to explain, a lot to understand. It's definitely something that took time for me, and I want to go ahead and cut that learning curve for you. Like I said, it's extremely easy. All you need to do, not easy, but simple. You want to learn what exactly is market structure. And if you watch this video to the end, you have a full understanding. 2, how to use it. 3, the different types of entries and the examples. And what I mean by examples is actually back testing, so you can gain those 4 laws that I told you about when it comes to the psychology. So family, I really hope you got some value off this call. I really wanted to break these things down in immense detail and how exactly to enter into trades, how market structure works, the importance of market structure. And family, go ahead and watch those videos. Click the links below. If you want to join my Patreon account or get into my my ebook, I came out with a new ebook. It's called The 10 Steps on How to Become a Consistent, Profitable Trader. I promise you, you will not you will not get disappointed. I promise you that. I worked hard for this. You got a lot of bonuses in there. It's only 47 bucks. I promise you, just go ahead and cop it. I got a lot of value in there. It's in the link in the description if you want to get behind the scenes on how exactly I trade, day in the life type of activities behind the scenes. Definitely join my Patreon down below. Very, very simple. Very, very easy to learn market structure. And family, I will see you guys in the next video. Peace out.